One of the quieter but more interesting stories developing in the crypto market right now is Litecoin, a coin that many people wrote off years ago, but which continues to show up in moments like this, when the market is uncertain, volume is thin, and risk appetite is selective rather than explosive. Today, Litecoin is trading around the $80 level. It's not setting social media on fire, but it is quietly outperforming large parts of the market on a relative basis. And that raises a question worth exploring properly, not just for Litecoin holders, but for anyone trying to understand how crypto behaves in late cycle or transition phases. Now the question you might ask is, why does Litecoin keep doing this? Why does it tend to hold up when markets feel tired, sideways, or indecisive? And why does it often start moving before broader retail enthusiasm returns, but after speculative excess has been washed out? To answer that, it helps to stop thinking about Litecoin as a hype asset, because it never really was one. Litecoin has always sat in a strange position in crypto. It doesn't have the narrative power of Bitcoin, the programmability story of Ethereum, or the explosive upside promise of newer Layer 1s. What it does have is longevity, simplicity, liquidity, and a very specific market role. It was designed as a payments-focused cryptocurrency, faster and cheaper than Bitcoin, using a similar but slightly modified technical structure. Over time, that positioning has gone in and out of fashion. In bull markets, Litecoin often feels boring. In meme-driven cycles, it gets ignored. But in periods where the market is reassessing risk, Litecoin quietly becomes relevant again. For anyone who hasn't thought about Litecoin in a while, it's worth taking a moment to reset what it actually is and what it was built to do, because that context matters for everything else we're seeing now. Litecoin is one of the longest-running cryptocurrencies in the market and operates on a proof-of-work system similar to Bitcoin, meaning it relies on miners to secure the network and validate transactions. It was originally designed as a faster and cheaper alternative to Bitcoin for everyday payments, using shorter block times to allow transactions to confirm more quickly and with lower fees. Unlike many newer projects, Litecoin doesn't try to do everything. It doesn't run complex smart contracts. It doesn't support decentralized finance protocols, NFTs, or layered applications. And it doesn't rely on governance tokens or voting mechanisms. Its role is deliberately narrow and functional. That simplicity is a large part of why Litecoin has survived for so long. Because it focuses almost entirely on moving value from one place to another, it remains easy to understand, easy to integrate, and easy to support for exchanges, wallets, and payment processors. Litecoin transactions are predictable. The network has a long track record of uptime and security, and its supply schedule is clear and fixed. Over the years, that has made Litecoin a kind of utility layer within crypto infrastructure, often used for transfers, settlements, and bridging between platforms even when it isn't being talked about as an investment. While it rarely dominates headlines or narratives, it continues to function quietly in the background, which is why it tends to reappear during periods when markets value reliability over experimentation. In short, Litecoin exists to do one job well. And that focus is exactly what keeps it relevant when attention shifts away from hype and back toward fundamentals. That's exactly the environment we're in now. Bitcoin is consolidating below major psychological levels. Ethereum is holding, but not breaking out. Altcoins are selective and uneven. Volume is lower. Institutions are cautious rather than aggressive. In that kind of market, capital doesn't rush into speculative assets. It looks for things that are familiar, liquid, and relatively stable. Litecoin fits that bill. Its recent price action reflects this dynamic. It isn't exploding higher, but it's also not bleeding out the way many smaller assets are. Trading volume has been steady rather than spiky, suggesting participation without frenzy. This is the kind of behavior you tend to see from assets that are being used as parking spots rather than lottery tickets. That matters, because parking spot assets often give early signals about sentiment shifts. If Litecoin were breaking down aggressively while Bitcoin held steady, that would suggest risk appetite was collapsing. But that's not what we're seeing. Instead, Litecoin is holding its range, occasionally pushing higher, and attracting just enough attention to remind the market that it still exists. Historically, Litecoin has performed best not at the peak of bull markets, but in the early and middle stages of recovery phases, and again during late cycle consolidation. It tends to struggle when speculative mania takes over, and it tends to re-emerge when markets calm down. There are structural reasons for this. Litecoin has one of the longest uninterrupted operating histories in crypto. It has survived multiple bear markets, exchange collapses, regulatory scares, and technological shifts. That doesn't make it exciting, but it does make it trusted. In uncertain markets, trust matters more than narrative. Liquidity is another key factor. Litecoin remains widely listed across exchanges globally, often paired directly with fiat currencies. That makes it easy to enter and exit without slippage, which is appealing when traders are cautious and not looking to get trapped in illiquid positions. There's also a behavioral component. Many longtime crypto participants are familiar with Litecoin. They've held it before, they understand it. When markets get weird, people gravitate toward what they know. That familiarity effect shouldn't be underestimated. It's also important to be honest about what Litecoin is not. It's not a growth story in the same way newer protocols are. It's not at the center of decentralized finance, NFTs, or Layer 2 scaling narratives. And that's exactly why it behaves the way it does. Litecoin doesn't need constant new buyers to function. Its role is transactional, not speculative, which makes its price action calmer, more range-bound, and less emotionally driven. If you go back through previous cycles, Litecoin has a habit of moving when enthusiasm is low, not high. During periods where Bitcoin is chopping sideways, volatility has compressed, and traders are no longer convinced that the next big move is imminent. Litecoin often begins to show relative strength. Not explosive upside, but stability, slow grinding moves, and occasional sharp rallies that seem to come out of nowhere. This is not accidental. Litecoin tends to perform best when Bitcoin dominance is elevated or stabilizing. In those conditions, capital is not aggressively rotating into speculative altcoins. Instead, it looks for assets that sit closer to Bitcoin in perceived risk, but still offer some upside. Litecoin often fills that role. Another reason Litecoin is showing up right now is its halving history. Litecoin has already gone through its most recent halving back in 2023, and that event passed without major drama. That removes a source of uncertainty. There's no looming supply shock, no countdown clocks, no buy the rumor, sell the news dynamics hanging over it. In contrast, assets with upcoming unlocks, vesting events, or protocol changes tend to experience volatility as traders position around those dates. Litecoin's recent resilience also coincides with a broader shift in how markets are treating older, simpler crypto assets. As regulation tightens and institutions become more involved, there is renewed interest in assets that are easy to classify, easy to custody, and easy to explain. Litecoin checks those boxes. It's not a security. It's not a governance token. It doesn't rely on complex smart contract interactions. It's a straightforward proof-of-work cryptocurrency with a clear supply schedule and a long track record. That doesn't mean institutions are rushing to buy Litecoin en masse, but it does mean it faces fewer conceptual hurdles than many newer assets. Litecoin also behaves as a timing indicator, rather than a headline asset. It often firms up before broader altcoin recoveries, not after them. It doesn't surge first, but it's the first one to stop falling. That matters, because most traders lose money not by buying too late, but by assuming everything is still broken when it's already stabilizing. Litecoin's role in those moments is subtle. It doesn't announce anything. It doesn't generate headlines. It just quietly stops making lower lows. That's what we're seeing now. Another underappreciated factor is Litecoin's relationship with exchanges. It remains one of the most widely supported assets globally, often used for transfers and internal liquidity. When exchanges tighten risk controls or adjust exposure, Litecoin frequently remains in the safe bucket. That doesn't mean exchanges are bullish on Litecoin. It means they're comfortable with it. Comfort matters in uncertain markets. Miner behavior plays a role as well. Litecoin mining has matured to the point where miners are not forced sellers in the same way they once were. Many are diversified or hedged, which reduces reflexive sell pressure and contributes to smoother price action. This is why Litecoin often becomes relevant when traders are tired of volatility, but not ready to exit crypto entirely. It's not exciting enough to be dangerous, and it's not obscure enough to be risky. That middle ground is powerful. Litecoin also exposes lazy thinking. If you only pay attention when prices are exploding, you miss what's happening underneath. Litecoin forces you to pay attention to subtlety, and subtlety is where advantage often lies. One angle that often gets missed when people talk about Litecoin is how heavily it's still used as a payments rail, not a speculation vehicle. Litecoin continues to be supported by payment processors, exchanges, and merchant services largely because it does one thing extremely well. It moves value quickly, cheaply, and predictably. In markets where users actually need to move funds between exchanges, convert into fiat, or settle transactions without worrying about congestion or high fees, Litecoin quietly does its job. That real-world usage doesn't show up in hype cycles or trending dashboards, but it does create consistent baseline demand. When speculative activity cools off, assets with genuine transactional utility tend to hold value better than those whose only function is price appreciation. That practical usefulness helps explain why Litecoin often looks stubborn during downturns, and why it remains integrated across so much of the crypto infrastructure, even when attention shifts elsewhere. Litecoin's durability also highlights a broader lesson about crypto cycles. Every cycle introduces new narratives, new technologies, and new tokens that promise to replace what came before. Some of them succeed, many don't. Litecoin has survived not because it wins every narrative battle, but because it doesn't need to. It isn't competing to be the smartest contract platform or the most innovative protocol. Its value proposition is clarity and reliability. When markets get overcrowded with complexity, leverage, and expectation, assets like Litecoin benefit simply by being understandable. Investors don't have to explain it to themselves every 6 months. That makes Litecoin one of the few assets in crypto that can disappear from headlines for years, and still re-emerge when conditions favor simplicity over ambition. None of this means Litecoin is leading the next bull market, or that it suddenly becomes the most important asset in crypto. It doesn't. What it does is reflect how capital behaves when markets are recalibrating rather than collapsing. Bitcoin is not breaking out, but it's not breaking down. Ethereum is holding, but not leading. Speculative altcoins are uneven. Retail participation is cautious. Institutions are repositioning slowly. In that environment, Litecoin's resilience is not a coincidence. It's a signal. So while Litecoin isn't making noise, it is doing something arguably more important. It's showing how cautious capital behaves when the market is resetting rather than panicking. And right now, that quiet signal may be more useful than any loud prediction. Thank you so much for listening. Drop your deep dive requests in the comments, and as always, we will see you at the top.